when you awake to a morning like today and you see that the U.S. dollar has made, or any of the currencies, this could apply to the euro, the Swissy, the pound, the yen, any of the dollar correlated majors, but when you wake up to a morning where your dollar index futures, where they were significantly heading down, not only made a significant low, but we started testing near that 7700 level, and we bounced up again. Definitely, this. Remember, if you're dating this is the weekend, after, of the G7 meeting. Okay, so we're not surprised by the timing of this kind of movement. This is right after that G7 occurred, so don't forget that. So we have numbered all our peaks here if we're looking at Fibonacci, and the reason, again, we're queuing in on this Fibonacci is because to understand what we're likely to see out of our dollar correlated majors, we have to be able to understand where the dollar's going. Now, the 4 to 2 last major move, again, most recent significant rally or sell-off, 4 to 2 best represents last major move. And let's go ahead and get as close as we can to the high to low. We're talking about a high of 77.64, apparently, down to a low of 77.09. Okay, so we're good there. Notice how we wicked above this, but look at where the resistance is really coming in. Look at where the candle closed. Look at where the next candle opened. Okay, so this is, again, just judging where this dollar is likely to go. We did wick above it, but take a look at the bodies of the candle. The bodies of the candle are really reflecting that 1.618 of the last major move being from 4 to 2. Also realize another thing we have going in our favor at this level is the 7900. But we didn't stop at 7900. We're really respecting that 7780, that 77, let's see, this close is what? On this dollar, 77.89. That can't be the close here. Let me open a cursor window up here. Let's see. Open, high, low, close, 77.89. There we go, 77.98. There we go. That's the number I was looking for. 77.98. So we're really respecting that 98 level of this 1.618. Now, again, the other move that we'll look at one more time is that larger move. Now let's try to look at this as specifically as possible. Okay, so like I mentioned, again, that low is 77.09. So I'll try to get as close as I can. And the high here I'm looking at, actually, where the 1 is at, that seems to be 77.33.9. 33.9, so I'll call it 34. So you can see that larger move nailed the wick at the 786 at 78.07. Now, how do we use this? That's really what we want to talk about now. Now that we've determined where the support and resistance is on the dollar, now remember something. If you were with me earlier, much earlier this morning, I drew in these Fibonacci's actually about between 5 and 5:30. That's about when I drew these Fibonacci's in. And back then, let me just show you real quickly, because I don't want you thinking this was something that happens after the fact. Let me just jump back here to show you when I actually drew these in. When I drew these in, this is what the chart basically looked like. And up until this point, actually I drew in before that even. There we go. At the point that I drew this in, I was looking to find out whether we would just make a 100% retracement and whether we'd find resistance where we have been finding resistance between 3 and 4. The number 3 and the number 4 points here. And I could see that we were stopping at the 382, and I thought, okay, we made it past the 50 tick area, maybe we'll stop here. But remember, all these other levels here were just waiting, telling me that if we do take out one level after the other, these are all waiting here as potential resistance. So as you look at this chart, just remember, every one of these is just potential resistance. And that's how you look at every single one of these levels. Okay? Every single one is just potential resistance. Now, once this was resistance, like the 25 and the 382, I look at the 25 now as support, not potential support. This is going to be support because what was once resistance is now support.